What would you expect NVIDIA to look like 3 years from now and 4 years from now?
Oh. Welcome to Telltales. I'm Mike Nicoletti. Every week, along with my co-hosts Jason Wallace and Hunt Lawrence, we bring you the cash flow memo. Get it at telltales.us. For the next 30 minutes, we're going to dive deep into energy, technology, and healthcare. So download the memo now and get started.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
Good to see. I'm going to surprise Mike and Jason because I really have nothing to add on Exhibit C. Prior weeks, I've talked about the U.S. and Europe making a deal with Iran and having Iranian oil be uninterrupted. I just have no idea whether that happened based on the news of the last week. So I think it's better when you don't have an idea about an inflection point, better to assume the status quo. So I think the status quo is Trump will come in and start to work on reducing Iranian oil exports. So that will tend to hold oil prices higher. On Exhibit B, not too much more to add to that, except that we're getting some cold weather, so gas is behaving. There are some new statistics there. You can see that we've got the Permian up at 20, and it is at least 20 in the U.S. gas supply. And the increase in 21 to 24 of 11 BCF a day, 7 is the Permian. And that's going to continue. So the key here is, will the production, which has been flat, 24 versus 23, not go up to more than 105 in the coming year? If that happens, maybe the futures curve of 340 next year will turn out to be true. On Exhibit A, we have more from Elon and Vivek. I think it's going to be remarkably successful, better than the other commissions, but they have a lot of work to do. I mean, they say $2 trillion, which is next to impossible, but there is a lot to be done in that $7 trillion of spending. I don't think this is any reason to sell equities or not to buy new equities. But for 24, we spent just under 7 trillion, and our revenue was just under 5 trillion. So there is $2 trillion of overspend, and that needs to be dealt with. I hope I've gotten through the exhibits in record time, because now I'd like to turn to the front of the 20 pages. And, the Wednesday before Thanksgiving isn't the end of the year yet, but it's certainly feeling like, let's put it this way, it feels like the 8th innings heading into the 9th inning on the year 24. We've got, new leadership, new political leadership. I thought a good thing to do today with Mike and Jason's availability is to, and thank you very much on the Wednesday before Thanksgiving, is just to review news as it impacts things on page 1. And just to lead off, it doesn't seem as though it's going to be a flood of orders for the iPhone 16 because they're going to have an upgraded Siri. It's coming out, as Jason predicted. It's very slow. Jason, do you have any further thinking on that?
Yeah, well, it's coming out slower than I thought. So the announcement is that they're working on it now, and full rollout won't be until early 2026. So not even for the launch of the next generation iPhone. We were kind of giving Apple the benefit of the doubt and saying that they were waiting to roll out a fully finished product and not, a half-baked version. But now it appears they definitely are behind.
Anything else on that, Mike?
Oh, the only other thing to watch here in the next year, especially with the new administration, but also the Google Apple trial, is if Google's not going to be able to make that payment to Apple. How does that shake out? Because that's quite a big chunk of free cash flow. So it could be a rocky 2025 for Apple, I think, unless some things change pretty dramatically.
Yeah. a lot of you on the phone, and certainly Mike and Jason, myself, are positive about Amazon most of the time, because even though the founders are off doing other things, Jeff Bezos, they still seem to be in a mode which Bezos, in his letters from the earliest times of Amazon being public, kept cautioning. And I guess internally, you have to think that, every day is the next day, or that whatever you've accomplished in the past doesn't matter. You have to focus on what you're going to do the next day. And it looks to me like Amazon's done that pretty effectively. I know Mike and Jason have recently pulled things apart to see exactly what an adjusted free cash flow would be. Here on this page, it's 38 billion, but I mean, they have a lot of capital spending, 80 billion of free capital spending. They have a lot of R&D, 80 billion of R&D. They really kind of distinguish themselves there. But with that, over to Jason.
Yeah, and that CapEx spend is transitioning from more of the logistics network and the consumer-facing version of Amazon into purchasing AI chips and developing their own chips for the Amazon Web Services part of the company, which is arguably a better business. So it runs our internet, right? And it has better margins. So it's a positive. And that's something that eventually they could scale back. You'd think the logistics network, they're continually going to be buying new vans and planes and maintenance, and that's kind of something you have to keep up with. Once the arms race, if you will, for AI chips is kind of run its course, which we don't see happening in the next 2 years, but they should be able to scale that spend back.
That's a good point, Jason. If you just look at what is the capital that Amazon's reinvesting in its own business, if you simplify it and look at this page, it's of all the companies, just add up the R&D plus the CapEx. Amazon's spending more on the future than anybody else is. And historically, Amazon's done a very good job of getting a return on those R&D and CapEx dollars. So they're just, if you boil it down to the numbers, they're the most bullish on the future of any company on this page.
Hey, Jason, if you were Jensen and you're worried about competition, are you most worried about Amazon and their chip designs, or who are you?
They have to be worried about that. They say they're not, and today they're not, because there's more demand from even Amazon than NVIDIA can supply to them. But at some point, all the training slows down and the inference market becomes larger. And that inference market, NVIDIA does dominate that today as well. But Amazon and Google and the other hyperscalers are all working on their own chips to do that. They want to be able to do it more cost effectively, because that's going to be the larger workload and the more well-defined workload. So if the inference business shifts to an Amazon designed in-house chip, that is a huge amount of competition to NVIDIA in the future.
Right. Alphabet or Google, Jason and I just turned that over to Mike, because his life companion's a litigator, and there really seems to be a discount in terms of the valuation because of the litigation risks. So over to you, Mike.
Yeah, it's interesting. If you do a sum of parts valuation on Alphabet, it really just depends on how much they're handicapped by any of these antitrust rulings. We don't really know yet. I mean, right now they're talking about taking away the Chrome browser, which is questionable whether that would be even a remotely good standalone business. Does that actually hurt Google? Probably not that much. But as they try to dig deeper and break up more parts of the advertising stack, would that change things? Maybe. And it really kind of depends. So you can see that it's pretty significant discount. It's trading about the same as Apple, which is, maybe hasn't invested quite as much or aggressively into this next generation of technology. So is that a good deal, or is that just a fair valuation given the question marks? I think that's the ultimate question. And the Waymo product, the Google Waymo car, they're talking about that could be split off and be a totally separate entity worth, $500 million to $800 billion. Maybe that's a little high, but there's certainly opportunities to break it up. And historically, when you look at these antitrust, when they do break it up, a business, it's generally worth more after it's broken up than it was as a conglomerate. So, I think it's an interesting, interesting stack of events, and certainly, it's not easy to come to a definite conclusion that it's going to be a home run. But it's also nice to see for an investor that there's probably some relative cushion or margin of safety, if you will.
Jason, on Microsoft, much fewer people paying $20 a month for that than you would have thought at this point, looking at it 6 or 9 months ago.
Right. We were maybe a little optimistic on uptake of the product, but long term, I think that thesis still holds. I guess the user, I haven't used that product personally, but what I understand is the user experience isn't as fully baked as we were hoping, as far as completing emails and automating tasks and stuff. But there's a near future where you're starting to see these AI products that are taking actions, multiple actions on the user's behalf, whether it's the first version is it can take over your screen and control your computer, and you can tell it to do more complicated things, and an AI agent will take several steps to complete the action that you've given it. And since you've given it full control of your computer, it can do things like open your email and send an email and pull up a presentation to attach to it. So I expect, Microsoft's taken the first steps at doing that kind of thing. They got a little pushback when it was recording your screen, and it was, I believe, recording passwords or credit card payment information that was recorded, that was entered. But they'll figure those things out, and then the Office product will be able to take relatively complicated actions on a user's behalf. So an email coming in might trigger a set of actions, like reaching out to that person, fulfilling an easy request that they might have. So I think the product will get a lot more valuable, and we'll see uptake on it. But yeah, today it wasn't there. I thought maybe there's not as many people building PowerPoint presentations, which is a tedious task, and I thought it would be great at doing that.
Yeah, let me just one thing to point out is that we have seen them pretty substantially increase their free cash flow, and whether that came directly from that Copilot product or just from the corpus of products that they are providing to companies that help them embrace some of these technologies, the cash flow has gone up actually faster than we anticipated, right? So we were anticipating the end of June of 2025 to be about where they are today. So, and then 90 billion by June of 2026. So I think that the thing with Microsoft is it's always easy to poke holes in somebody else's product. And you can see if you follow any of Salesforce's marketing, they're basically attacking Microsoft aggressively, mainly because the Microsoft Dynamics CRM is maybe becoming more competitive with the actual Salesforce product. But the reality is that the early implementations of Microsoft's Copilot haven't gone quite as well as they had hoped. Now, for every negative story, there's probably 10 successes. So I think the balance is still on par.
Yeah. Microsoft owns GitHub, and the product there that is a coding agent. And I don't know if they've published direct stats on the uptake there and the revenue generated from the coding agent at GitHub, but Google recently said that 25% of all the code written at the company now is generated by AI. So you could see you translate that to the GitHub product side, and it's going to be hugely successful, but a niche market.
Tesla, when it was at 200, and Mike and Jason and I would be on the phone, I'd be arguing the value was 100. Of course, instead it went to 300, but it's pretty much autonomous driving. Don't you think, Jason? Or
Absolutely. It's the values increased greatly since Trump was elected. And the hope there is that there's a national standard for autonomous driving versus piecemealed at the state level. And that the administration will be more friendly in rolling out the regulations there and allowing Tesla to put these cars on the road. That said, they did have a really good quarter. Let me scroll to my notes. That their sales price of their vehicles were down, yet their gross margins were up. So they're getting much more efficient at building the cars. And Elon talked about it, I believe, a year ago, that they were working at the Austin factory on retooling their assembly line. So I don't believe he spoke specifically to that, but maybe we're seeing some of the fruits of that.
no, they're very good at doing their business. They're also, their financial situation is terrific. I mean, they have free cash flow. They don't have any debt. It's just really impressive. I'd like to skip 2 because I plan to do some updating on 2 this weekend and go to 3, which is updated now for the NVIDIA results, which are terrific. Mike and Jason probably have a higher free cash flow than mine at 69 billion. And that's, kind of a current run rate, not a prediction for next year. But think of it, this company has gone from 2 or 3 billion of free cash flow, which is impressive, to, almost as much free cash flow as any of the companies on the first page. And just quickly looking at the first page, we have Apple at 95, Amazon at 38, Alphabet at 63, Microsoft at 68. So, I mean, it's just kind of I would say unprecedented. So then the question becomes, is this sustainable? Not just is it going to grow from here, but will they, I think Jason a few minutes ago said, he's pretty confident that the market, the CapEx for the hyperscalers is going to, and other users of GPUs is going to carry this thing for at least a couple of years. This is a hard question. And of course, Mike and I have the benefit of talking for about 20 minutes every morning, Monday through Friday, 5:30 his time, 8:30 my time. So I'm talking to Jason. Jason, if we didn't hold you to it, what would you expect NVIDIA to look like 3 years from now and 4 years from now?
Oh, I think I would say 3 years from now, it looks great. Their growth rate's sustained. And then 4 years from now, maybe it's plateaued and growth is flatlined. And 3 years from now, there's still a line of sight where they're sold out of their chips for the next year. And then there is a pipeline of data centers that are being built right now, and they're largely constrained by being able to source electricity. And those will all have to be filled with NVIDIA chips. On the software and the technology side, we're starting to see NVIDIA's just released a voice or a sound model. So you can have it create different sounds, including voices. That these next modalities past just generating text are starting to come to fruition, and that will occur over the next 3 years. We'll start to see, it generates lifelike voices, sound effects, music, video. We're going to get very good at all of those things. But at some point, as we're seeing with the text generation, the amount of data that you put into the model produces diminishing returns. So at some point, these models become good enough. We've trained the text generation on all of the content on the internet today. And then once they hit that good enough state, you're just augmenting it with the new content that's being put out. The same thing will happen with audio, music, video, and movie generation. that kind of thing. And at that point, when we no longer need to be building larger and larger clusters for training, that's when we'll see pressure on NVIDIA. But that's years away, in my opinion.
Yeah. Plus, as the chip technology gets better, there's other dimensions of the model to optimize against. So, as much as everybody's currently focused on this pre-training piece of the puzzle, you got to remember that that's just one piece of these models. There's post-training, there's layers of inference, and I think that there's a lot of runway in the adoption of these technologies. We haven't even figured out how to use a good chunk of this stuff yet. So, the bigger fear is that because of a recession or something, a lot of large companies start pulling back on spending because they just can't afford to be investing in too many different places. Even then, this is probably one of the best places to be investing capital. So I actually think it's a fairly clear path to $200 billion in annual revenues. I think you have a run rate number here of 130. So, it doesn't seem substantially that much higher, but you can see the path. The question is there anybody come up with something competitive? And the reality is it's not just having competitive hardware, you have to have competitive software too. Closest to that is Amazon. Tesla's trying. Tesla's got some pretty interesting chips. But again, being 2 years behind or even 12 months behind is practically a lifetime in this industry. So I think it stays where it is.
Yeah. And AMD is building a competitive GPU, but just like their competition with Intel, they might be nearly the same capability, but the integration with the operating systems, or in NVIDIA's case, the CUDA software stack, we're seeing the same dynamic play out where NVIDIA takes 95% market share and AMD is left with the single-digit percentage.
Right, and see, look, they're spending $12 billion a year in R&D right now. That's just being pumped right back into a good chunk of that. More than 50% of their engineers are software. A good chunk of that R&D is being pumped right back into the software. So it's a self-fulfilling prophecy, or let's say like a self-licking ice cream cone, and that the better that software gets, all of the chips get better. So it really behooves you to be an NVIDIA customer, and the differential in price makes up for itself relatively quickly in most cases.
Okay, let's take a quick break for a message from Oakcliff Sailing.
Hello, everybody. This is Dawn from Oakcliff. Once again, I'm outside by the water. This time I brought my Christmas tree because that's coming up. The fundraising season is coming up. But what I really want to do is take a moment and just talk about the thankfulness that I have for everything that Oakcliff, you as supporters and donors, have helped us do. The most important thing, and the thing I am always most thankful for, is the graduates of ours, which is nearing 1,000, and have taken the mission and the messages and the work ethic that Oakcliff has taught them and gone forth and grabbed opportunities. And it's not just the Americans. Last week I was in Metz in Amsterdam, ran into Seth Cooley at Future Fibers, who's a graduate, doing great. We talked about Solomon Crevens. We emailed him, and he happened to have just been with Jake and Meyer climbing mountains in Utah. So you never know where they're going to go. And as I said, it's not just the Americans, it's also the French, who were prototypes to the Acorns. So caught up with Seb Cole and Benjamin Murrell. So it's an international effort that we're leading here at Oakcliff, and we truly, truly appreciate your support. We'll be talking about support and donating next week. But for right now, Mike Nicoletti, another graduate, we appreciate you putting this on your podcast, and Hunt Lawrence and the Lawrence family, our thoughts are with you and our gratitude is strong. Thank you very much.
And now back to the show.
Just one thing that is a little bit different than page one and the chip business is page four. Your leading company is Netflix. We briefly mentioned it last week, but Netflix, when they put on their Mike Tyson event, had 100 million people that they were streaming to. And many Netflix customers had poor video and poor sound. Obviously, they want to fix that by the time they get to Christmas Day when they're going to be doing 2 NFL games. But Jason, what is will that result in a lot more business for Amazon Web Services and Azure, Microsoft's Azure, or who's going to benefit from streamers having to be able to simultaneously send out, handle 100 million streaming customers?
Yeah, Netflix is operating on Amazon, so they will benefit. And this type of workload is maybe harder for Amazon to handle because it's a quickly scaling, it's a fast scaling challenge, but that costs more to do if you're Netflix. So as opposed to they have a pretty good grasp on their usage metrics and they're going to prepay for a lot of server capacity at Amazon. In this case, they're going to know, hey, we need a lot of capacity for 3 or 4 hours. And you won't prepay for it. So you'll be paying the on-demand pricing. But yeah, the Mike Tyson fight was a great test for them. I'm sure saw where the system cracked. Getting another test in before the NFL games on Christmas will be tough. So they'll have to simulate a lot of that, but they're gonna, I think they'll succeed in having a good show on Christmas.
I'd also add that one of the advantages to using Amazon as a partner, even if you're paying on-demand rates, it'll sort of inform the way that Netflix goes about doing these live events. Doing a live event on Christmas Day is perfect for Amazon because Amazon servers are doing nothing on Christmas Day. Most business workloads aren't really occurring. People aren't surfing the internet quite as much. So it's a really good compatible solution for both companies.
Right. The Christmas shopping season's over that day.
How do the networks, when one of the networks, ABC or NBC or CBS, has a Super Bowl? Well, first of all, do any of those audiences get to be as much as 100 million? Maybe not.
Oh yeah, some of the Super Bowl audience is definitely larger than that.
Uh-huh. How do they handle that?
So with cable, they use one-to-many technology, right? So when you actually broadcast, I assume this is still how they do it, but you'll take the initial live stream and you'll shoot it up via satellite and then back down to regional base stations. And from those base stations, it gets syndicated via cable, which is also a one-to-many technology. So it's hard to actually fathom the difference in the scale of data that has to move for everybody to be individually streaming versus just receiving a one-to-many signal. It's absolutely two different wild challenges. And just a few years ago, it wouldn't have been, I don't think, feasible to actually get that much 100 million people streaming the same thing at the exact same time. Does that sound correct to you, Jason?
Right. Yeah. I mean, it's largely distributed over cable, and they've had decades to perfect that and the scale built up. One thing about these streaming services is they built scale relatively quickly and without doing live streaming. So when they turn it on, like we saw, they're going from 0 to 100 million.
Good. We'll be here 7 days from now, same time. And everyone have a good Thanksgiving. Thanks to Mike and Jason for being available the Wednesday before Thanksgiving. You won't necessarily get that done when it comes to Christmas and New Year's, but otherwise we'll be here every Wednesday. Take care, everyone. Be well. Stay healthy.
The views expressed on this podcast are the hosts alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the hosts nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, expressed or implied, is made as to, and no reliance should be placed on, the fairness, accuracy, timeliness, or completeness of this information. The hosts and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future, and may or may not hold positions in the securities mentioned.